Hey, everybody. So welcome back to Money Matters with Marshall and me, Mickie.
Hi, Mickie. How are you?
I'm doing okay, Marshall. And boy, do we have a topic today.
You do.
So, yeah, we do. Warren Buffett. Yeah, the Oracle of Omaha. He dropped a big bomb. It's a big warning, right? And every investor needs to hear this, of course, because when he talks, everybody listens. Whether
Mm-hmm.
not. And I mean, at the same time that he's dropping this bomb, Investor Weekly is saying, well, wait a minute here. This could be one of the biggest wealth building opportunities for investors. So
Right.
it's different sides. I mean, what do we think about all of this?
Right.
I mean, where do we go with this, Marshall?
Exactly. Well, Warren Buffett has a great history of being on the right being at the right place at the right time.
Right.
And he's done this for a very long time. And what people are noticing is they notice how much cash he has on the side. So right now, Berkshire Hathaway, which is the company that he's the chairman of, or he actually just stepped down this year, believe it or not. He's 94 years old. Did you know that?
I knew he was up there, and every day I'm just so thrilled he's still with us. So
Yeah. He's an inspiration for me.
Wisdom.
He's an inspiration for me because he's just a few years older than me.
Oh yeah, just a few.
But yeah, so people watch how much cash he's got, and then he was making some statements about the effect of this bill that the government is just pushed through, the one big beautiful bill. And across the board, left or right, there's really not much as far as reducing government debt in this bill.
Yeah.
Right. And Warren Buffett has famously said he could solve the problem of government deficits and debt in 5 minutes, but they won't do that because it's simple. Right. He basically says if government spending is above 3% of GDP, all of Congress should be fired and hire new people.
Yeah.
Right. Very simple. 3% of GDP, simple number, simple concept. But the politicians won't do that. So we're kind of stuck where we are. And so the opportunity, I think, here is what Warren's talking about is the market overvalued. Now, there's a lot of ways to measure the value of the market relative to history. And so a lot of these metrics are showing that it's overpriced. And so, you always see the charts of the market, these ups and downs. And, overvalued mean it's above average. It's above the trend, right?
Sure.
And so what Warren Buffett is doing right now, he's holding a lot of cash and he's waiting for that bubble. I don't think it's a bubble. It might be a bubble to go into a slump, and then he puts that to work. And so I think that's what he's talking about when he's talking about the greatest opportunity. But it takes patience. It takes the guts, the fortitude to sit there and wait.
And that is so hard.
It is.
I mean, I know for myself, I have a lot of amazing talents and attributes, but patience is not one of them. And so, I've always heard people say, and especially you, Marshall, that patience is what pays. That if you can sit tight, that's what doubles money. That's what makes money is being patient. And I'm just not very patient.
Yeah, no, I followed Warren Buffett for a long time. Even before I was a professional investor, a professional money manager, I used to read his annual reports. Have you ever read his annual report?
I have not. No, I do respect the man greatly, but I don't. That's not my thing. I'd rather you read it and share it with me.
This is what's great about his annual reports. Number one, he writes them himself, right? He's one of the largest companies in the U.S. and he writes his own annual report. And he's done it since 1965 or, really a long time ago. So you can go back and find these annual reports and read about what he's buying and what he's talking about. And so, for years I followed him. And I remember during the dot-com crash. Do you remember the dot-com crash? You probably don't. You were probably in preschool.
It was before my time. I wasn't quite born yet.
Yeah, but 2000, 2001, oh my gosh, they were dogging Warren Buffett so bad, right? That he's out of touch. He said, I never buy anything I don't understand. Right. And they were dogging him. And then it crashed. And then he bought all kinds of stuff. Right.
Oh, yeah.
So go forward to 2007, 2008. There again, he made so much money when the subprime crisis happened. Right. He had cash. The government was calling him to invest, to buy stuff because he had the cash to buy it.
Sure.
Right. And so, one of the things Warren Buffett talks about is if you only have 20 swings your life, you only have 20. It's a punch card, your life as an investor. You have to be judicious in when you use that.
Right.
And so you look at, so these cycles can take, 5, 10, 15 years. You got to wait. And so I think what they're talking about is number one, he's waiting right now because you can tell about how much cash he's got. You can tell the market's overvalued. And so yeah, so now there again, people are saying he's out of touch, but they like to hear him talk, because he's been right so much. He's been right so much.
So much, right? And so that begs to, talk about that. He says America's current path is unsustainable.
Right.
So how does that affect everyday investors?
What it did, I mean, prior to 2022, we had a ramp up of inflation in 2022, so the Federal Reserve had to raise interest rates to around 5%. Okay, prior to them raising interest rates had been zero for 10 or 12 years, zero. And so one of the reasons the people believe the government kept the rates at zero is because it reduces the amount of interest they have to pay on their debt.
Okay, yeah.
So what it does, it punishes people that hold cash. So I have a lot of clients, older folks, that love CDs. They love cash because it's safe, right? It's considered safe. It's really not safe. But that's the physical doom loop they're talking about, when the government, their interest payments on their debt is higher than any other budget element in their entire budget. So when rates hit 5%, the interest cost on the U.S. debt was higher than the defense budget. Okay, that's the doom loop. That's what they're talking about. So let's say, right now inflation is under control, but if they had to raise interest rates, it raises the cost of the debt. And so this is what they're talking about. Right now, the Federal Reserve is on reducing interest rates, but that's what they're talking about. And it's scary stuff. It really is.
It is, because it has a lot to do, and correct me if I'm wrong, but with government spending, right?
Right.
And so it's kind of like I came across this. It's kind of like, I like this analogy. It's kind of like a teenager with a credit card,
right?
And they're going crazy, and it's not stopping. And it's us taxpayers that are paying the price for it. That's
right.
It's tough. So
yeah, it's going to be interesting to see how this plays out. But it's been going on for a while, and it's just unfortunate that they're not taking it serious to resolve these issues. Either right or left. But we'll see. We'll see what happens. But as investors, you have to find ways to put money in different places. This gold in the last couple of years has been phenomenal. I've been looking at it in client accounts. Believe it or not, Mickie, like 40% in the last year on gold.
I know. And it used to be like, I don't know so much about gold, but it really is. It's really solid. So solid gold. I figured you'd understand that reference.
Did you have a career as a comedian, a stand-up comedian at some point?
But
yeah, solid gold.
That's right. Yeah.
Get no respect.
You're so funny.
So anyway, but that's one of the reasons gold is going up, is because central banks around the world are buying it, because these governments are like teenagers with a credit card. They're going crazy.
Right. So now with all this debt, and it's massive, right? So how does massive debt like this affect things like stocks, real estate, all different types of assets that or investments that investors would want to rely on? How does that affect it? How does that affect it?
The biggest effect is interest rates, right? Because like I was saying, if interest rates get too high, the government has too much debt payment interest. So they want to keep the interest rates low. But that's good for real estate.
Yeah.
But what happened when rates were zero forever and then they went to 5%? What happened to the real estate market?
It
tanked.
Right.
Yeah, it did. So that's how rates affect it. Rates and inflation affect what's going on in the stock market, because valuation is based on the interest rate. There's a lot of details about how that works, but those rates affect how the valuation works. And so anyway, so that's
I know
part
that
of
it's important for the interest rates not to be dropped too much too quickly.
Right.
Because that can throw things really out of whack.
Exactly.
And to your point about real estate, because I always love talking about real estate, we need to see those interest rates continuously coming down, because that starts to get, in my humble opinion, as a real estate expert, I feel like that's what we need to get real estate moving again. We're a little stalled out right now. People aren't buying. And sellers don't want to lower the price. It's a weird time right now at the time of this recording. And we really need to start seeing it. It is coming down a little bit right now. And that's good, because it's starting to get people going, okay, let's start thinking about this again.
Yeah, it came down today. Did you see that? It came down today?
Yeah.
It did.
Yeah.
So So that's good. But the problem is all the people that have mortgages at 4 and 5% or whatever, they're not going to give that up.
No, especially those who have them at 2% in the twos, like this girl. That's right. And people, on a side note, when you do see the interest rates come down, if it's lower than what you're paying on your mortgages, please go refinance them. Talk to a mortgage lender and see if refinancing is right for you. So
there you go. Are we sponsored by some mortgage company?
I know. I was thinking we need to be sponsored by a mortgage
What's the
lender.
deal?
I know so many of them.
Free?
Hey, mortgage lenders out there that know me, come on. Yeah, you want to sponsor our show.
Yeah. So it's hard to know the future, right?
It is. Right.
And so what we do is asset allocation. You place bets in percentages, stocks, bonds, cash, currencies, sure. In commodities like gold. Yeah. And so gold has done well for us. And so you're just doing that because you don't know for certain, right? Right. So that's how we go about that. But you got to listen to Warren Buffett. You got to watch what he says and watch what he buys. Watch what he's selling. So
yeah. And I'm going to rely on you to watch him, and then let me know. So
gotcha.
Let us all know, Marshall. What?
Yeah. Well, Warren Buffett is not a friend of real estate agents. You know that. You know why?
He just stepped down from Berkshire Hathaway. Hello, real estate.
Well, no, get this. He lives in the same house since 1950 something. Yes. He's never sold the house.
I know, but that's his residence.
I know, but as a realtor, you're like, hey, can't you buy something a little bigger?
I'm pretty sure he's wise enough to buy other real estate ventures that he may or may not live in. But yes, I knew that. That's kind of cool.
Did you know I knew so much about Warren Buffett? Did you know that? Did you know that?
I did know that. I know that yes, I know that you know a lot about him. That's why you're the expert that we're talking to.
Not an expert. Some people study his every move, but anyway, great investor.
Yeah. And thanks for sharing a little bit about the diversity too, because I'm guessing that's how you feel like investors can take advantage of these kinds of opportunities much more safely when they diversify into different areas. Yeah. Okay. Good deal. All right. So I have a kind of a weird question. It's related to what we've been talking about. How do you balance passive buying for stability with active strategies to capitalize on these rare market dips?
Wow. What a sophisticated. Wow.
I've been researching.
Active strategies.
Yeah.
I love it. The idea of Warren Buffett is he's a buy and hold, right? So he buys and he stays in the market. He doesn't try to go in and out of the market to time the market because that's very hard to do, right?
Oh, but that's
active strategy. So I've talked about this before. Is Warren Buffett says you should buy the S&P 500 and just forget about it, right? Buy an index fund and forget about it. Well, there's more to it than that. What we talked about, diversification and all that. But that's basically what he's saying because an index fund is a passive investment because it's not actively moving. An active fund is somebody just trying to decide and gain and beat the market, right? By choosing, and that's extremely hard to do. And there's lots of statistics around that. It's hard to do, and it's a rare person that can do that. And Warren Buffett is one of those rare people. But his strategy is really holding. I mean, one of the reasons he is as wealthy as he is because when you sell stock, you have to pay tax on the capital gain. Did you know that?
Yes, I'm well aware.
You buy it at a certain price, it grows. If you sell it in a taxable account, you have to pay tax on that difference.
You do.
Warren Buffett is so wealthy is he's never sold his Berkshire Hathaway stock. So his capital gain is unrealized, but it's billions and billions of dollars.
Yeah.
Okay. So that's the reason that he stays wealthy. He stays engaged. Now, it's not that he's not buying and selling things, but he's actively, participating because one of his things is he believes in the U.S. capitalist system of free enterprise, people investing in great companies, building great things, and so, that's one way. So that, I have to be careful about active and, who's being active and how smart are they? Are they able to really do this or not? Because that's
a good point. Yeah. What's their track record, right? And Buffett definitely has a track record. So, I mean, yeah. He's a good role model to follow because he is so prepared. And I think it was you who was sharing with me, people who are prepared, investors who are prepared are the ones who they are able to hang in there when there's a downturn. Right.
Right.
So, I mean, like, what are some of the what are some of the like lessons you've learned from like
Mhm.
past
Mhm.
market crises, that
Yeah.
have happened over your lifetime?
My long life. Thanks a lot.
Yeah, that's a good thing. You always
Um,
said that you're almost the same age as Warren, so
yeah. So
you guys
one
went
of the
to
things
preschool
I've
together.
learned, and I learned this from Warren Buffett. You know what he spends most of his time doing every day?
I have no idea. What does he do?
Reading.
Oh,
Reading annual
there you go.
reports, reading
That makes
about
sense.
companies, reading details of what's going on with the economy, the companies, the people that work for him. That's what he does. That's education. He spends his time educating himself so that he can make good decisions.
Right.
And so one of the things I strive to do when I see, market doing certain things, you look at history, you educate yourself. Have we been in this before? Anything similar to this before? And then how did it work itself out? And so, the market's always looking for a reason to, crash or go up or whatever. And it's going to continue to do that. That's a part of the process.
Yeah.
It's a part of what's called price discovery, right? Where's the value and where are people willing to buy it? And so that's what I've learned is just, you read and study history so that, because if you watch the news, they always will tell you, this has never happened before. This is
And it's
new.
like, yes, it has. I lived through this.
Never in the history of humanity has this happened before. And you look at history and you go, wait, this is sounded like this kind of happened before.
Yeah, this feels like what just happened back, a decade ago or 2 decades. Oh, I know. It's crazy. You have to laugh or you'll cry.
I know.
It's crazy. So I have a question for all of you watching right now. I want you to go to the comments and I want you to put in the comments, are you ready right now? Are you poised to act on investment right now? Like throughout this, are you ready for this next mind shift or I should say shift in wealth earning, building this opportunity? Or are you somebody who's like, nah, I'm just going to sit back and wait. I don't know. So I want to know, are you ready now? Are you going for this? Or are you just hanging?
Yeah.
So, put it in the comments. We want to know and share your strategies with us. We want you to share. So we're always wanting to learn more about that. So,
well, Mickie, you've heard me say, one of the things we strive to do is have the heart of a teacher. And I love to talk to people about investing. And as much as they want to talk, I try not to, if their eyes glaze over and they start falling down on the table, I stop.
Hey, stop talking about our last meeting.
But anyway, I like to help people learn about market history and what's going on and how to invest.
What you learned was how to just break it down so it's understandable. And that is why we have this podcast show, so that you can break it down for all of us. And we appreciate it. So thank you so much for sharing on this today, Marshall, and between the two different sides of the story and learning more about what Buffett's all about too, because a lot of us really respect his thoughts and so forth, and he's definitely has the clout to prove his expertise. So
yes, definitely.
And thank all of you for watching. Catch another one of our episodes in our playlist and be sure to subscribe so you don't miss the next one. Thanks, everybody.
Thanks, Mickie.
You're welcome. Bye.